June's job surge, what it means for the Federal Reserve's next steps. The U.S. job market delivered a surprising boost in June, surpassing experts' hopes and likely reducing the chances that the Federal Reserve will lower interest rates this month. According to the Labor Department, the U.S. economy added 147,000 jobs in June, significantly outshining the anticipated increase of 110,000 as projected by the Wall Street Journal's surveyed economists. Meanwhile, the unemployment rate fell slightly to 4.1%, down from 4.2% in May. But here's where it gets interesting. Healthcare continues to play a key role in job generation, proving its enduring strength through various economic fluctuations. Also, while the federal government shed 7,000 jobs, state and local governments matched that loss by increasing their employment by 73,000 jobs. Government employment as a whole rose by 73,000, a promising figure when you consider the broader economic impact. And this is the part most people miss. Revisions to previous months' data revealed that hiring was even stronger than initially reported. The combined job increases for April and May were revised upward by 16,000 jobs. White House Press Secretary Karoline Leavitt celebrated these filled job positions on social media, pointing out that this marked the fourth consecutive month where job creation exceeded forecasts, with nearly 150,000 new positions added. She highlighted that these job gains were exclusively among American-born citizens and emphasized that wages continue to rise, suggesting a robust economic rebound. There's a strong political twist here. President Trump argues that his administration's firm stance on controlling undocumented migrants has reshaped the labor market, reducing foreign-born worker numbers while increasing employment for native-born individuals. Since February, the first full month of Trump's second term, native employment has surged by 2.1 million, while the number of jobs for foreign-born workers has diminished by over 500,000, representing the steepest decline in such employment since the early days of Barack Obama's administration. Wall Street responded positively to the report, with the Dow Jones Industrial Average rising by 344 points to reach 44,828, the highest it's been since its inception. Both the S&P 500 and the Nasdaq also continued to hit new highs. Controversy and comment hook. This unexpected resilience in the employment figures could lead the Federal Reserve to hold off on cutting interest rates in July, an action many had anticipated. Press Secretary from Northlight Asset Management commented, "The strong jobs numbers combined with extended tax cuts and possible higher tariffs make a July rate cut less likely." Zaccarelli also suggested that if the Fed does not act this month, we might see a rate decrease later in the third or fourth quarter. Such a delay might conflict with President Trump's calls for more aggressive rate cuts, but he's described as essential for economic growth and often criticized Fed Chair Jerome Powell for being too slow. Remember to ask, do you think the Federal Reserve should have acted sooner on the interest rates? What's your perspective on the impact of controlling foreign-born employment on the labor market? Share your thoughts below.